that is starting to inform my thinking around the Bitcoinization of art, if you want to call it that. Art, design, architecture. Over time, I have kind of come to realize that it is about the risk taking, right? And it's the reason you have the 45th Avengers movie, right? You need risk taking, and you need a way to incentivize that risk taking at every level, at the creative level, and kind of at the patron level, right? So you don't think of studios as being patrons. And so you think about, the patronage system for arts that, was through the Renaissance, and even science, like scientists had patrons, right? That were just rich dukes or whoever. And we're like, this mathematician Leibniz is like really smart. I'm just gonna give him money to like sit here and think about really deep issues and come up with something that might progress society forward. We are envisioning is kind of this swinging door, this portal between traditional insurance and the Bitcoin economy. And we want to be that bridge to both, because I think Bitcoin, as you were just pointing out, will progress and will stabilize and grow in maturity as insurance engages with it. The flip side to that is if you could swap out the fiat collateral base of the insurance industry with something harder like Bitcoin, it really changes the incentive structures, and it really changes how profitable the business could be, but also, how much cheaper overall insurance can be. Bitcoin is a means to an end, and the end should be a fulfilling life. And so whether that's, the enjoyment of art, the creation of art, spending more time with your family, right? Like, because ultimately time is scarce. You want to be able to spend as much of it as possible with those you love.
Hey, everybody. Welcome back to the Think Bitcoin podcast, where I talk to Bitcoiners about big ideas, art, philosophy, and the humanities. If you've been enjoying the show, please take a second to like, rate, and of course, subscribe to the show. It really does make a difference. Today's guest is Aaron Daniel. Aaron is the co-founder of Resolvr, an insurance tech company that bridges the global insurance market to Bitcoin. Aaron is also a deeply experienced attorney and a writer, notably having contributed an essay to the Satoshi Papers. We talk about technology, the history and cultural importance of insurance, art, the infrastructural maturation process of Bitcoin, and more. So without further ado, please enjoy this conversation with Aaron Daniel. All right, we are live. Welcome back, everybody. Aaron Daniel, welcome to the Think Bitcoin podcast. It is good to see you, my friend.
Yeah, good to see you too. Now back online. We met a long time ago online friends. Couple of Bitcoin lawyers just nerding out over the years on Telegram, and then got to catch up in person for the first time a couple weeks ago in DC.
Yeah, that was really nice. Yeah, I was going to say we're kind of the proverbial internet acquaintances. I'm imagining some listeners hearing you say, Bitcoin lawyers just nerding out on Telegram, and they're probably thinking, wow, that just sounds nightmarish. But, to each their own. To us, it's a fascinating space from a legal perspective, obviously. And you are very, very involved in that. And you've been really involved in that. And I think the legal discourse in the space for some time. So those are topics that we want to touch on today. But yeah, it was great to meet in person finally. I really enjoyed that conference. I thought that conference was kind of the perfect size for a Bitcoin conference. And it was
a nice size. And, like the DC conferences and a lot of the conferences, you always get some of the lawmakers, some of the usual suspects, that you can guess who would be there from DC. But what I thought was interesting was it was like GW University that basically put it on, and just a really cool kind of program, like hub, Bitcoin education hub that they're putting together there, like within the university, with some support from like the Plan B network. And just seems like they have a really good group of, professors and academics who are actually starting to think through some, think Bitcoin, right?
Yeah, exactly.
So that was cool to see that intersection.
Yeah, and I think I agree. I think the GW affiliation, because GW's name, they have this, the kind of social and like cachet, and outside of the Bitcoin space and the normie space, such that I was having conversations with some of my non-Bitcoin friends in DC while I was there, and they were asking me what I was doing, and I said I was at this Bitcoin conference, and then I told them. They said, "Well, where is it?" I said, "It's at the Kennedy Center. GW is putting it on." And immediately their eyes they kind of plug in a little bit, and they go, "Oh, okay. So GW, I know what GW is. That's not a crazy internet thing. That's a
That's
real
right.
university that they do real things." And so it lends a certain amount of credibility, especially having the lawmakers there as well. So I thought that was certainly productive. Well,
Yeah,
so Aaron, there are certainly listeners to this who are going to know who you are, certainly. But for those who might not, let's do some obligatory background here. Just
sure.
can you kind of summarize your Bitcoin origin story, how you went from, I know you were, I guess, still an appellate attorney. Um,
Yes.
you and I, our journeys to Bitcoin, I think, are somewhat conventional. I mean, neither you nor I started out in finance in any
Right.
way.
Exactly.
I don't know about you, but I have no computer science background whatsoever.
Right. Same.
So yeah, so I'm curious, just tell the listeners how it was that you went from being an appellate attorney to getting into Bitcoin, and now you're the founder of a Bitcoin company that we're going to
Yeah.
talk about. And you've really just got a lot of irons in the fire in the Bitcoin space. So tell us how you got here.
Yeah, it's interesting because we are, like you said, we're kind of the non-traditional Bitcoin enthusiasts, but I think at this point we're becoming more standard. Like we're probably, I mean, I don't know how long you've been involved in Bitcoin. I've been involved since very early 2021. So, not a terribly long time in the scope of Bitcoin, but later in its development, and for a few years now. And so I think by that time, the early wave of, like you said, those, really, deep computer science and cypherpunks, as well as the finance people who could understand it and from the economic side latched on early. And then we were kind of that next wave of interested enthusiasts, right? And that's where it started for me was, um, it's that same post-COVID, middle of COVID kind of, what are we doing with our finances? I got a lot of time on my hands looking at alternative investments. You discovered cryptocurrencies broadly. And then again, because of where I was in Bitcoin's development and the amount of resources that had been built up, there were tons of podcasts by 2021. Lynn Alden had been writing a lot of great investment thesis pieces on Bitcoin and the broader ecosystem. And that's kind of where I fell into it. And then, but I think, there's always, everybody's usually heard of Bitcoin, like unless you were very, very early, right? But it has to trigger something that your experience has laid, right? In your life. And for me, it was, obviously as an attorney, I was looking at it through the lens of property rights and
Mm,
seeing this as being, the quintessence of real property rights is that, once you have your private key, no one can part you from your Bitcoin. And that is, possession of that private key is 10/10 of the law for Bitcoin.
yeah.
The fact that you can completely eliminate counterparty risk to a degree that had never been done before, and you can also take, that custody of your Bitcoin, self custody, but you can distribute it, right, among different key holders as well with this thing called multisig, which was something that had never really been able to do before, right? You still had to have gold in a physical vault somewhere. Yeah, maybe you could have three separate keys, but it was still in a physical vault somewhere, right? This was, property rights backed by math. And for me, as an attorney first, that was very fascinating. And then my experience growing up. So my father was a seminarian and he taught
Mm,
like budding pastors, right, around the world. And we lived in Africa for a time in a very just war torn part of Africa, Liberia, which
hmm
many people might have heard of, but former founded by former American slaves, freed slaves. And so they're, Monrovia is the capital, President Monroe, very tight connection there with America. But at the time we were there, it was a complete war zone, civil war. It's like six different warlords vying for control. There was like a ceasefire in place, peacekeepers around the country. But like obviously, when you have a country that has a sovereign money, sovereign currency, and an economy, and then is going through civil war like that, there is no economy, there is no currency, right? There's nothing to conduct trade with. So I had memories as a child of like having, just fanny packs full of these Liberian dollars, right? And you'd go and like
Fascinating.
maybe get a candy bar at the like, Lebanese market, that was there, right? It was, and then we also had to leave very quickly as Charles Taylor came back and took over the country mid 90s. So I did have that actual experience of leaving everything behind. Now, luckily, I was born in America, in the unipolar moment, right? So I was very fortunate, unlike other of our friends who were there and had, lived their whole lives in the country. Um, they didn't have anywhere to go to, right? We had that luxury. We were able to return to the United States and restart, just pick up our life where we left it off. But that's when that property rights it just hit me in the face with Bitcoin. I was like, wow, this is amazing. And this was before the Ukraine war, when you started to actually have stories of people traveling across borders with their seed phrases to start a new life in Eastern Europe, right? And so that's really what got me interested. And then even though I didn't have computer science background, I had always been pretty technical.
Mm-hmm.
And so like I was really interested in the Lightning Network, and like I think a few months after finding Bitcoin was running a node on a Raspberry Pi and stuff. So
Wow.
it was also a fun kind of technical outlet for me from that perspective.
Yeah. So much fascinating there. What I find really interesting, one of the interesting things what you said is I think about this period of time during COVID where we locked down the country. Everybody stayed home for weeks or months. And I like to think about the hypothetical of where would Bitcoin be if not for COVID, and not just because of the price and the infusion of the money supply that kind of created a lot of the macroeconomic conditions that we're all familiar with now. But setting that aside, I think there's almost a Cambrian explosion of Bitcoiners, I think, that happened during that time because you shut a lot of very smart, very curious people with a lot of heterodox life experiences, and they actually got an opportunity to just slow down and
Right.
think a little bit about society and about the world and about the different power structures and institutions of power in the world, and really have some time to contemplate those things. And a lot of people came to the realization that something seems amiss here, and
Mm-hmm.
and I think that was a big. I would imagine the concentration of folks that went down the rabbit hole in 2020 is probably very, very high. I mean, I personally, I discovered Bitcoin in 2017, got
Mm-hmm.
some, but I sold it in the top of that. I was in law school. I just had other things going on, and I didn't really return fully until 2020, just like you.
Right. Yeah.
That was the moment I was at home. Work had really, really slowed down, and started thinking about all that stuff. But I often wonder, and when we look back 20 years from now, are we going to say, wow, without this kind of 6 months where we just took people off their respective hamster wheels, is Bitcoin in the same space, or
Yeah.
did we just mobilize a whole generation of smart, thoughtful
Yeah, it
Bitcoiners?
was that was really like the super cycle. It was like the super cycle of adoption.
Yeah,
Then right, it's like we gained 1 4 year cycle extra almost. We
totally.
just
And I think
accelerated
we're
through that.
seeing the fruits of that now. I mean,
Yeah,
obviously, like you were among a bunch of different people who fully orange pilled at that time, and now are building companies in the Bitcoin space. And so we're seeing the flowering of all of that, which is a good
yeah,
segue to talk about your company, Resolvr. So, Aaron, this is an insurance tech company. Before we get into kind of the nuts and bolts of what Resolvr is doing, the problem that you're seeking to solve there, I'm hoping that you can maybe talk to the listeners a little bit about the insurance industry generally. We were kind of talking before we started recording about how everybody has in their brains this vision of insurance, mostly based on, I think, health insurance. But
Yeah.
Can you talk a little bit about the role of insurance in society in terms of tying it together and what maybe most people don't understand about the industry?
Yeah, I think there's a lot of different directions we can take that, but most people day to day relationship with insurance is paying out premiums and not really expecting to get, you know, their claims covered at the end of the day.
Right.
And like I, as a appellate attorney, I actually did litigate a lot of insurance disputes on both sides, on behalf of insurance carriers, also on behalf of policyholders, and on a host of different types of malpractice insurance, medical malpractice, property casualty, trucking accidents, homeowners insurance, right? In Florida, that's a big one.
Mm-hmm.
We're still litigating Hurricane Irma cases here in Florida. Like it takes a really long time to get through the legal process, and so that is most people's interaction with it. But I would posit that the kind of negative taste we have in our mouth with insurance, and a lot of it gets, I mean, like think about United Health, like corporate greed, right? It's kind of that same lens people have when they think of like big pharma and these kind of
Right.
giant, amorphous institutions that seem to maybe exist to be predatory, right, and extractive on our lives. And again, I posit a lot of that is from fiat and the degradation of our money. And so as the money that is backing insurance, because at the end of the day, the insurance company is taking in premiums to pay out claims later, right? And taking in premiums, so they're holding a certain amount of funds with an expected rate of loss that they have to cover, but those losses might not occur for 5, 10, 15, 20 years. I mean, think about like end of life care, right?
Mm-hmm.
That's if you're smart, you take it out when you're young and healthy, right? And pay on it. But then when you're older, um, not only has inflation just, ripped through any value that the funds would have, right? The payout would eventually have, but it's also the cost of everything has exploded. It's like the flip side. So like the money is melting, right? That's like sailors things. You got this ice cube that's melting, and then you've got rising costs, all because of the fact that our money is just you know melting away. M2 is skyrocketing, right? Driving the price of everything up. And so that is kind of my overall kind of general thesis on, why insurance seems to suck, right?
Mm-hmm.
And there's a lot of little nuances, as also as an attorney, dealing with insurance occasionally. But where insurance started, it's risk transfer, right? It is something that existed in the 17th century is really when it kind of started. Like Lloyd's of London is the big marketplace that everyone knows by name in the UK, but that was literally a coffee shop. It was like Edward Lloyd had a little coffee shop, and coffee was what everyone drank in England before tea. Like coffee was, because tea was pretty far away over in China, right? It was really hard to access in the 17th century. Coffee was a little closer. Coffee started in Yemen, was grown there, came over land through Turkey, right? Like Turkish siege of Vienna. That's why you've got such good Viennese coffee there.
Interesting.
Like Julius Meinl, which is like a very famous Viennese brand. Like the image is like literally like a little young Turkish boy with a fez on, right? So like that, so it goes over land, right, into the continent, and then this continental scholar named Canopius brings it to England and brews the first cup of coffee there in like 1650 or something like that, and then it just explodes, especially as shipping really picks up, right? Technology is getting better, trade routes are getting more efficient, and that's when you have the coffee houses that come up. And what would happen was you'd have these ships, these voyages going out to trade to the new world, and you'd have multiple owners of these ships who would come together, these names of owners who would come together and say, let's pool our resources on these voyages now. Because, if I send my ship out and it crashes and it gets lost at sea, high probability at this time, I'm done. I'm bankrupt, right? But if we can all put our names, we're going to write underneath this slip of paper that has the contract. So underwriting it, we're all going to underwrite this voyage here. We're going to, if one ship is lost, that's okay. We only lose, a tenth of what we owe, right? Or what we own in the aggregate. We're going to spread the risk around. We're all going to be better off. And that was a catalyst for progress, right? Because now it's much easier to go on these ventures, to fund these ventures if you're not going to be bankrupt. You've reduced the risk, right? And progress is all about incentivizing risk taking.
Right.
That's literally progress. That's how we, gain in, technological advances, trading, you name it. Art, I would say, is just involves a little bit of risk, right?
Yeah.
As well to really advance a medium. So that's where insurance started, and it really accelerated from there. And so I think if everyone just steps back and thinks about, just a pure insurance in its purest form is spreading risk and just aiding progress. The modern world would not be where we are today without these layers of insurance. And then you can get very, very complex. The reason we can have houses on the beach in Florida is because an entire industry of reinsurance exists to backstop the insurers, because any one insurer that's going to take on all this risk for, earthquakes, fires, etc., like they're going to need their own insurance. And there's actually called retrocession, which is reinsurance for reinsurers. So, it spreads all over the place. But this is what's so fascinating about insurance and why it's really crucial and really vital that you have a strong insurance base for your economy. And it's staggering to me that Bitcoin is now at $2.3 trillion and has almost no real native Bitcoin insurance markets to speak of. It is really wild.
Yeah, that's I appreciate you laying out that history, Aaron, because I think that's really important for folks to understand that this idea of risk transfer and being able to spread risk around is, most people, like we said, they hear insurance and they don't think of this history. They don't know this history. They don't understand how really the efflorescence of what we would call capitalism, or like you said, taking ventures that catalyze progress that we're all benefiting from now. You have to be a society that incentivizes or at least empowers and enables risk, and you can't do that if you do not have a robust insurance kind of grounding in your society. So, I view this as kind of, I don't know if you would agree with this, but I view this as Bitcoin coming into insurance is kind of an instantiation of infrastructural maturity. I think that for
Yes.
Bitcoin to be what we want it to be, some of these maybe less obvious, or when folks on Twitter probably don't think about it as much, these types of industries, these are the sinews and the ligaments of the body that hold it together. You cannot, you have to have more than just kind of bones, to have a functioning body, if that analogy makes sense.
Yeah, no, it makes perfect sense. And, I think it's so multifaceted, right? Because so our company Resolvr, we're an insurance tech company, and we can get into the details of what we're doing and how we operate, and what kind of products we're going to be bringing to market. But what we are envisioning is kind of this swinging door, this portal between traditional insurance and the Bitcoin economy, and we want to be that bridge to both, because I think Bitcoin, as you were just pointing out, will progress and will stabilize and grow in maturity as insurance engages with it, right? The flip side to that is, like we were talking about earlier, if you could swap out the fiat collateral base of the insurance industry with something harder like Bitcoin, it really changes the incentive structures, and it really changes how profitable the business could be, but also, how much cheaper overall insurance can be for, because obviously if you're sitting on capital that is increasing in purchasing power over time, then you don't have to charge as much in premiums, right? To make up for that shortfall. So I think there will be benefits to everyone, even those who have not adopted Bitcoin, um, and don't even know that maybe Bitcoin is helping to, you know, power their insurance over time.
100%. Yeah, it's fascinating to just think about all of the downstream ways in which sitting on an asset that has a CAGR of 20 or 30% sort of indefinitely, all the different unlocks that creates in pretty much every industry. And I continue to be excited to see all the industries that I haven't even thought about yet that are going to get affected by this. I recently interviewed a burgeoning film studio company
Mm.
who are using basically Bitcoin bonds to almost transfer the risk of it's sort of like almost like a quasi insurance concept of
Mm-hmm.
transferring some risk of financing films, giving you kind of a coupon on the bonds. And so that's a whole other industry that I don't think people have fully thought through yet that Bitcoin
Yeah.
unlocks. But
Yeah,
let's,
the film industry finance
yeah,
side is horrible for creatives. Just
yeah,
like just like most creative industries. The financial incentives don't make a whole lot of sense for the creatives there. But
yeah, they just don't let, like, kind of like what you were talking about with, incentivizing risk taking. They just don't incentivize the right kind of risk taking. And I think that the consumer suffers in all of these scenarios. The consumer suffers uh, from that. So let's talk specifically about Resolvr, Aaron.
yeah,
For folks, a lot of folks aren't intimately involved in the insurance world. I kind of have a picture in my brain of the different parties involved in the insurance system, and you and I are maybe somewhat. We both have been on the plaintiff claimant side of the V here
right.
against insurance companies. So there's some understanding that we have, but can you just locate people in the kind of picture of the different
Yeah,
parties
that's
in
great.
insurance? Just orient us. Where does Resolver sit in that picture?
Yeah, that's a great place to start. So, we'll start with the policyholder. Everybody who knows that is because that's you, right? You're the policyholder. You've purchased a policy. You may have purchased that policy through an insurance agent, or maybe you did it directly online through like Progressive, right? So you've got agents and brokers who are working on behalf of policyholders and also working on behalf of the insurance carriers to match make risk, right?
Gotcha.
And so policyholders, brokers, agents, and you have like the insurance carriers, underwriters. Those are the actual companies that have the balance sheet, that are issuing the policies, that are taking the risk from you, the policyholder. Um, there's a lot of different flavors of that, and it gets complicated. But then from there, you also have reinsurers that are taking risk, some risk from the insurance company, like we talked about earlier. And then you can also have reinsurance brokers there at that level. Resolvr is none of these. Well, we're a policyholder of our own insurance, but we are an insurance tech company, and one of the solutions that we've built is a insurance marketplace. So going back to that, Lloyd's of London marketplace, we would be Edward Lloyd in the coffee house. Edward Lloyd wasn't an underwriter. He wasn't, going on the voyages. He wasn't buying policies, but he was creating the space where demand and supply for insurance could be met. And then he was propagating data and gathering data about it. Like he would issue the Lloyd's list, which would have a list of a bunch of different opportunities, and he would be very knowledgeable about loss ratios and who had the better ships and et cetera. So that's where Resolvr is sitting with our product called BDIC, which is the FDIC for Bitcoin. We have a marketplace, and we embed that marketplace directly with platforms, exchanges, wallets, anywhere where users are investing, buying, holding Bitcoin. And we offer kind of like point of sale access to insurance. So think about going and buying a plane ticket for air travel. You'll have that Allianz offer right there that says, would you like travel insurance on this, right at the point of sale? We built that, but to ensure your Bitcoin, loss of Bitcoin, um, predatory attacks, violent crime on you, on your Bitcoin. And then we work with carriers on the back end and have them join our platform. They offer their policies on Bitcoin. Now, what we are doing and prioritizing, BDIC means Bitcoin denominated insurance collaborative. So we're collaborating on facilitating Bitcoin denominated policies. So what does that mean? That means you buy a policy on one Bitcoin, the limit will be one Bitcoin in the contract, in the policy. Your policy premiums will be denominated in Bitcoin. We have a payment processing infrastructure where you could pay that in fiat or you could pay it in Bitcoin, but it will be denominated in Bitcoin. You'll have to pay the correct amount that is Bitcoin. And then your claims, if there is a loss, will be paid in Bitcoin. So you are, one Bitcoin is one Bitcoin. You lose that Bitcoin, you're not going to lose the appreciation that you would lose if you had a fiat denominated policy for a certain amount of time. Now, policies are about 1 year, right? So, but you can have a lot of volatility with that 1 year on Bitcoin, as we know. So you could lose a 50% gain. You could, also be on the winning side of that, and your Bitcoin is worth less, but your policy is higher. But ultimately, for insurance carriers, they want to match their assets with liabilities. And so, an insurance carrier doesn't want to be holding that, those dollar T-bills to back a volatile asset like Bitcoin. And there are a number of jurisdictions that allow insurance carriers to issue these Bitcoin denominated policies, and we're working really closely with a lot of the insurance carriers in those jurisdictions to offer that option there. So that's where we sit. We're the market makers. We're bringing the insurance directly to where the users are finding and holding their Bitcoin.
That's really interesting. So I mean, I have several questions off of that. My first question is with the premiums. So you talked about the option for the policy, or I guess the person purchasing the policy to pay the premium actually in fiat, even though the policy itself would pay out on the Bitcoin, which I think is very cool for a number of reasons that we can talk about in a little bit. But do the premiums themselves, let's say Bitcoin rockets up, do the amount of the premiums kind of float a little bit? Is that kind of one of the things that when you pay in fiat, like let's say if you were to choose to pay the premium in fiat versus Bitcoin, if you paid it in Bitcoin, I assume one Bitcoin is one Bitcoin. That price is probably staying the same in Bitcoin, denominated in Bitcoin. But if you choose to pay it in fiat, I imagine is there some type of floating mechanism where if the Bitcoin rockets up, then your premium is going to be a little bit higher in fiat terms to account for that gain. Is that
right?
Right. Okay.
Yeah. No, that is accurate. We have to grab that conversion rate basically at the time of the payment. And so if you're paying month to month on your premiums, some months it could be less in fiat, some it could be more. And so that amount of volatility might not work for everyone. That's a choice that policyholders can make if they want to say, all right, I want to keep my Bitcoin. I don't want to pay premiums of Bitcoin because I want to keep as much of it as possible. And I'm okay with, kind of knowing a range of what my premiums are going to be for this Bitcoin insurance policy. That might not work for every policyholder. Certainly not like a company that would have most of their liabilities in USD, right? Or if they're earning USD as well, like they need to smooth that out a little bit more. And that's why we're also, it's Bitcoin denominated insurance collaborative, but there will be fiat denominated policy options as well, to give all the policyholders that option of what works best for them. And, we haven't quite implemented the contours of this feature yet, but again, to make sure that the users are aware, having notice of, your policy premium will be 20% higher this month than last month. Like, do you want to continue, right, with this policy? Like we could we can work those notifications in. I personally would probably be like, all right, my Bitcoin's going up. I definitely want to keep my policy in place, right? But you know, individual circumstances obviously differ. So
Yeah,
yeah,
it's
and
interesting
that
that
is,
I was gonna say that
yeah,
that almost what I find intellectually pretty interesting about that idea is it allows individuals. I guess one of my theses, just generally, is I think a lot of industries are figuring out ways to construct avenues of kind of a quasi speculative attack, just like kind
yes,
of across industries
yes,
in ways that are sort of non-intuitive, right? I mean, nobody
hmm
thinks about insurance in that way. Um, but what you're describing is, I mean, if you're somebody who wants to take a policy out on their Bitcoin and you say, of course, I'm going to pay in fiat, I'm completely okay with the fiat price floating. I mean, as an individual and maybe not as a
right.
business, because the gain on my Bitcoin is basically always going to outrun, any losses that fiat losses that I'm going to sustain by paying a higher premium. And it allows you to. It's just like another component of your life that you're able to sort of engage in this quasi speculative attack, which
It
I just
is
I find very
exactly
interesting.
that, which is why, we're serving, retail and enterprise segments, and most of our partners that we're going to be working with serve all these different, segments and, small, medium business. But the ability for an individual, yeah, to run that kind of arbitrage speculative attack through their insurance premiums, on this asset itself, is pretty interesting. And you could see that really expanding to other risks, right?
Yeah, I think
Besides just
about like
Bitcoin
life
risk.
insurance. I mean, I guess meanwhile, I'm sure you guys have some type
Yeah,
of relationship and with them. I imagine
yeah, I'm
just as kind
very
of
very close with. Meanwhile, those guys are pioneers in
yeah.
Bitcoin denominated life insurance. Yeah, they run their entire operation denominated in Bitcoin. Yeah,
Yeah, I was talking to Pierre Rochard last week for an episode, and we were talking about this idea of the speculative attack, which I just find just really, really
yeah.
fascinating. And I asked him, has there ever been kind of any historic analog to the just sustained, systemic, really nuanced, different ways in which people like you are figuring out how to do this? And there are some industry specific, I think, historic analogs, but I
hmm
don't think that what is starting to happen with companies like yours, I don't think that degree of thoughtful speculative attack, just in a sustained, explicit, laid out
Right.
way, has ever happened. It's also why I kind of think that Michael Saylor is going to go down historically as I think his influence is underrated right now, just because I think it's his
Hot
because
take.
yeah, well, just because I think the idea that he's kind of putting in place is it's kind of like for me artistically, I think of there's a band called the Velvet Underground from the '60s. Lou
hmm
Reed fronted them, highly influential. But the joke, the kind of I guess lore about them is that the story is that only 200 people, 300 people saw the Velvet Underground play live when they were in existence,
Wow, I
and
didn't I
all
didn't realize
200 of
that.
them
Yeah.
started bands. And then those bands went in, and that's kind of the level of influence that they had,
hmm
at their time. And I view, I did notice kind of a hot take, and people have their thoughts about Sailor, but I do view him that way because I think it's interesting.
Yeah. No, I like that analogy a lot. And it is fun to think through all the different ways that you as an individual and just society is starting to awaken to the fact that their money is broken, and we're in this information asymmetry phase right now where we haven't crossed that chasm into the mainstream. So the early adopters have this huge advantage, right, where they can run that arbitrage play.
Yeah. How do you, when you talk about this idea to, your peers, maybe coworkers, folks that you work with, people in your orbit, in your world, what's the response? How do people respond to this idea of kind of integrating Bitcoin into what seems like a very traditional type of industry?
Yeah, I mean, there's like we were saying, there's two sides to it. There's the yes, Bitcoin should have some insurance on it. That makes a lot of sense, and especially, you know, the fact you've got FDIC kind of for banking and solvency, right? My dollars are FDIC insured. I know they're safe in the bank. You got SIPC for your brokerage account, right? So I know that's secure. I think some of what's holding Main Street back is Bitcoin seems, not just volatile, but also like, it's not insured. Like what happens if, I'm taking possession of it and I lose it, or, my custodian, US bank has custody of it. And then, something happens, there's a breach, right? It's not insured. Like, so being able to get some kind of specie and or crime insurance, on your Bitcoin holdings directly where you're holding your Bitcoin, like that makes a lot of intuitive sense to people. But the flip side of that, yeah, is, this traditional, 500-year-old industry of insurance, you know, are they going to adopt Bitcoin, right? And, what we actually started, our first product, the backbone of everything we build now, is our payment system, our premium manager, and we built it on Bitcoin and the Lightning Network, because we're like, this is insurance premiums take between, correspondent banking system, the various, like we were talking about, parties involved, brokers. Usually you have many brokers, especially if it's a reinsurance deal. You'll have many reinsurers on a reinsurance panel that are all kind of layered like a layer cake. And then the layer cake is, also split, vertically and,
Right.
not just horizontally. So it gets very complicated to account and reconcile for who's supposed to get what portion of premiums. And that can take upwards of 6 months from the time that like a policy premium is paid.
Oh, wow.
We're like, well, Bitcoin does solve this. It is programmable money. You can program that contract split directly into a payment invoice payload and create a bunch of different Lightning channel splits. And then we partner with on and off ramps in various jurisdictions that will do that final last mile conversion into fiats, whichever fiat it is, and deposit it into bank accounts of the various parties. So we built that first, and we were like, this thing is amazing. It's real time premium payments. Like Lloyd's of London is going to save, tens of billions of dollars just by, actually having real time settlement on this stuff. But it's still a very hard thing to sell that kind of like swap out your,
Yeah.
correspondent banking system with Bitcoin. Like we're still not quite there yet. So we're leveraging it,
Yeah.
to make sure that all of the, users who are coming into BDIC have that benefit of real time settlement, and the carriers have the benefit of real time settlement and, multi-currency splits. So payment side, I think, and obviously stablecoins is like a huge win as well for cross-border settlement. I think Bitcoin is better for wholesale settlement like insurance than stablecoins, because the depth of liquidity, you need a multi-trillion-dollar market to settle, multi-million-dollar premium payments, right? That like most of the stable coins are a couple hundred billion, maybe.
Yeah.
If you aggregate them all together, actually, I think the depth of liquidity is not even a trillion on stable coins. So like you need something that's deep liquidity and that will move in this kind of multipolar, high distrust global macro environment we're in, something that isn't going to get sanctioned, right? Ultimately, if you're crossing borders. But so that's the payment side of things. A long way to go before the entire insurance industry wisens up to that. So you can kind of do it in the background. But yeah, the investment side is really where it's going to start taking off as some of these early adopters, like the Meanwhile we were talking about, 100%, Bitcoin. But there's others who are doing it, and, and some coming from the traditional, like there's Bitcoiners who are doing this and folks in the crypto space who are starting insurance companies. But we actually know of like reinsurance professionals who are moving into this space and are like, hey, now they're talking about crypto broadly and digital assets and tokenized all things being part of the part of the regulatory capital backing fiat policies, which, whenever we talk to folks like that, we're like, narrow it down to Bitcoin at least.
Yeah.
Like that's pristine collateral. You could do stuff, all the other stuff, and maybe insure the other stuff, but use pristine collateral, right? Use Bitcoin to back it. So like that's starting to happen. And then I think what really is going to ignite kind of this, the next wave of insurance company, this kind of Bitcoin native insurance company, is it won't be, the big players like Allianz or, Swiss Re or whoever that come in. They're starting to dip their toes into it a little bit through some of, Sailor's different vehicles, right? Insurance companies have been buying that. But it'll be the treasury companies that realize we're never going to catch Sailor. He's got an order of magnitude more Bitcoin than we'll ever have. The market's going to continue to, follow that liquidity and that deep pool, right? And just continue to reward him at the expense of all the other companies that are trying to run that same play with the financial markets. But we can differentiate by becoming the insurance company for all of these other Bitcoin treasury companies, and then move into actual traditional vanilla insurance using this 10,000, 20,000 Bitcoin base that we have. Because even one of, you look at the top, like 10 or something, and they have, between, I guess, like 15 and, 30 or, 100,000 Bitcoin, like a percentage of that, of any one of those treasuries, would make them the largest Bitcoin backed insurer that exists currently, right? And just soak up all of the market demand across, mining and, retail, enterprise, like to be able to scale out these products like we're bringing to market on BDIC. We're going to quickly run up against the available Bitcoin that exists in the insurance market to back policies. And so the opportunity is very large for a forward-thinking treasury company to say, we actually will use this Bitcoin, and we're going to use it to stabilize the Bitcoin economy.
That's really interesting. I mean, I love thinking about treasury companies because it's so fast. It's just such an open space. There's so many possibilities, and I hadn't really heard that. I love that idea that, I mean, a lot of these treasury companies, they could potentially retain some flexibility down the road. Just by, it's kind of the strategy could be just buy as much Bitcoin as possible now. And what you're doing is basically, it's like a call option on transforming your company later into something like an insurance company or like a bank or something like that. I mean, people like to talk about that with respect to strategy sometimes, about them becoming a big
They'll
bank.
be the bank. They'll be the Bitcoin bank. Yeah.
Which I find very, very interesting. It's also interesting. I think Jeff Walton, who is with Strive now, he's from the reinsurance industry.
From the Strive board. Yep.
Yeah. And so that's
he gets this very deeply. So the Strive folks are very forward thinking. There's others like BSTR, which is the Blockstream affiliated company. Their chief investment officer, Sean Bill, has said exactly that. There's Caribbean markets that allow you to do Bitcoin denominated insurance, and we're exploring that because we want to be the Berkshire Hathaway of Bitcoin, right? So these, fifth tier and lower companies are really starting to think through that play.
And I find the Lightning piece very interesting as well. So because there's the discourse on Lightning seems to be a little bit ambivalent or conflicting. I mean, some folks are very bullish on Lightning. Some folks are very bearish on Lightning. At least that's kind of my ground level perception.
Yeah,
of the
depends
discourse.
It depends on what your, I guess, initial idea of the Lightning Network, what you thought it was supposed to be, right? If you came in like 2021, when I came in, the narrative around Lightning was very much like micropayments, right? And even it was still very hard to do. It's always been hard to do Lightning in a very self-custodial way. You have to run your own node infrastructure ultimately if you want to have complete control over the keys to your Bitcoin, right? That's a trade-off that most people aren't willing to make. I mean, I made it for a while, and then I was like, this Raspberry Pi, it's time to convert you into a retro gaming system for my 9-year-old, because I'm going to derive more value out of that than having to tinker with my Lightning channels. And there's ways that, like Blockstream, Greenlight has kind of this nice trade-off of having a little bit more control over your keys. Like Zeus wallet has created a really nice stack for a little bit more self-control over the Lightning Network, but it's still difficult at the individual level. So now that liquidity is growing on the Lightning Network, you are seeing this shift to kind of wholesale payments, right?
Yeah.
Enterprise level payments, and the number of, like, I think River puts out a bunch of reports, and I think Breeze put out a report this past year. I think all, kind of saying the same thing, which is fewer transactions, I think, over the Lightning Network, but larger transactions, and fewer dropped transactions too, because, I took my Raspberry Pi off of the network. So like my tiny little disconnected, node at the edge of the network that was potentially, screwing up a route, um, that they've kind of left, and you've got this professional class of Lightning service providers
Yeah.
that are doing that. So that, if that wasn't your vision for Lightning, like, you're like, oh, it's failed. Like, I thought we had this thing called peer-to-peer cash, right? And this was like the promise of making Bitcoin that cheap peer-to-peer cash, right? But I think it is wildly successful now for, if you're just looking at connecting the world, right?
Yeah.
There, in my opinion, yes, self-custody is something that every human should try to strive to maximize their property rights over all of their property stack, right? But there's trade-offs, and it's a nice inversion. If you're going to say, I'm going to use Lightning, but I'm going to do it in a custodial way, it's a nice inversion of what we have with the dollar and cash. My wallet, I have self-custody of like a few $100, right? I'm flipping that with Lightning. I'm saying, you take custody of like a few $100 that I'm going to spend. And so if you rug me, I've lost a few $100, right? But the real wealth requires a custodian in the fiat system. So I'm still okay with Lightning being custodial because it inverts that. And the majority of my wealth, I can self-custody now.
Yeah. That's interesting. Yeah. I mean, this is a rabbit hole I don't want to go down, but I think one of my sort of really hot takes is, I guess, I think that in terms of the peer-to-peer cash, what I think could be interesting, I think, to the extent that other chains have value infrastructurally, the rails that they're creating,
Mhm.
I think it'll be to almost like synergize as an L2 to Bitcoin and enable, like, use their rails to be very, very fast micropayment
Right.
Bitcoin stuff. And I know that there are companies working on that, which is, I know everybody hates to hear that in the Bitcoin world. And I get it. I truly do. I think most of this stuff is nonsense, but there's some serious infrastructural projects that, if they succeed, I think that's what they're going to succeed in. I think it'll be interesting to see a lot of the crypto industry broadly sort of almost like fall to this, just, you're either synergizing with Bitcoin or you're dying.
Right.
That's
Well, I
kind of
mean,
what I think it is.
that's like the Blockstream Liquid network, right? Is a very optimized, efficient, hyper flexible, now that simplicity is live on it, which is like basically a full Turing complete language. You can have really expressive smart contracts there. But it is they've tried to keep it very close, and with the Bitcoin stack, right? But it still does require a bridge, a swap in from your Bitcoin, and ultimately, it's a federation. The nodes are run by the consortium of companies that run the blockchain. It's open source, so it's not it's not JP Morgan chain, right? It's not this like Swift, correspondent banking chain. It is still open, and there are safeguards in place. But that's the trade-off there. But they maintain kind of that Bitcoin connectivity there. So and that's one where everybody dogged Liquid for a long time, and still continues to. But I think it's just starting to hit prime time now. And we're looking at it at Resolvr very closely. We have some projects in the works related to tokenizing and creating securitized tranches of risk that could be traded across the Lightning network, interoperable with Lightning. You issue it on the Liquid network. And to really drive kind of Bitcoin yield, but to, again, fund, the existing capital that can back insurance, and to get, individuals, and institutions, to participate essentially in alternative reinsurance contracts without having to be a full reinsurer, right? Just optimizing. And so like Liquid gives you some of that. There's other L2s, yes, that are coming online, with various zero knowledge proofs and bridging, to Bitcoin that are, attracting a lot of economic value to
Yeah.
them.
Yeah. That's it's definitely gonna be interesting to watch all that play out for sure. I think we're very, very early stages in that, but I think that's gonna be kind of a confluence that starts to happen and people start
Yeah.
to see it. But I want to switch gears somewhat radically here, Aaron, to this podcast. I like to talk a lot about the nexus between Bitcoin and the humanities, art, culture,
Yeah.
stuff like that. What a flourishing society might look like, just because I think fiat has taken so much from us that we don't even fully, I think, appreciate or consciously internalize. And so I wanted to ask you, sitting in the insurance industry, understanding the transfer of risk, we've kind of touched on in passing the idea of art itself involving,
Hmm.
um, or these long term art projects involving risk taking. I think it's important for a culture to incentivize artistic risk taking, and fiat just really doesn't allow that. How do you think about maybe the future of culture, the humanities, art, that type of I think stuff that really helps a society thrive how do you think about that in a Bitcoinized world, and how can that
Hmm.
be restored a
Yeah.
little
My
bit?
thinking, and that's a great transition, and pulling that kind of risk transfer that we've been talking about into the art world, because I do think that is starting to inform my thinking around, um, the Bitcoinization of art, if you want to
Hmm.
call it that, art, design, architecture. So my thinking on this has evolved a lot over the time being a Bitcoiner, because I remember Safety Namus talking about this, in a very kind of general way. Even in his book, I think, the Bitcoin Standard, I think he just brings this up. It's like, hey, art used to be so pretty, and now look at our architecture; it sucks, right? And
Yeah.
like you hear, like Tucker Carlson will even say this, right? Like, oh, look at, this horrible modern art and this horrible modern architecture. Like it sucks, right? And the reason for that is fiat. It's like, okay, but why, right? Like, like
Yeah.
to me, those things seem orthogonal a little bit. Like, okay, yeah, money, economy, like that's one thing, but, art is like subjective, right? Like it should really have nothing to do with our money. So that's kind of where I was kind of like skeptical of this, just because I never really got like a good explanation for like why those things would be interrelated. But over time, I have kind of come to realize that it, it is about the risk taking, right? And it's the reason you have 45th Avengers movie, right? Is because it's so safe to put
Yeah.
out another one of those, as opposed to putting out, what was the movie that Coppola just put out that looked completely wild, and I didn't get a chance to see it.
Is it the new Sophia Coppola, or the because I know she just put out one as
Francis
well.
Ford Coppola,
It's
and it
Francis.
was,
Okay.
Adam Driver, and it was very it had very, like Atlas Shrugged vibes, or like Fountainhead vibes or something, and it looked just completely wild and got panned critically, but like he literally just self-funded it, because he was like, I've got this really crazy idea for a movie and I wanted to make it,
What he
and I'm
famously
just
did with Apocalypse Now too. He
that's what
almost
he
bankrupted
exactly,
himself. Yeah.
and took a risk on himself there, and that's where you get, sometimes like it's not going to be great, right?
Yeah.
But then over time, sometimes, you know the cult hits become hits over time, right? And they weren't commercially, successful, right? And so you need risk taking, and you need a way to, um, incentivize that risk taking at every level, at the creative level, and kind of at the patron level, right? So you don't think of studios as being patrons, but that's essentially what they are, right? Of creatives when you're talking about movies. And so you think about, the patronage system for arts that was through the Renaissance, and even science. Like scientists had patrons, right? That were just rich dukes or whoever. And we're like, this mathematician Leibniz is like really smart. Like I'm just gonna give him money to like sit here and think about really deep issues, right? And come up with something that might progress society forward. And you know, so you start in the Renaissance, and it's kind of feudal, and you've got obviously uh, a lot of inequality there, but a class of elites that values kind of longer term development, especially with arts, right? And so like my favorite kind of era is Belle Epoque, which is, and in Vienna, it was the secession movement. Gustav Klimt was very famous there. Art Nouveau in France, Jugendstil in Germany in like about 1880 to basically World War One, right? Which interestingly coincides with the classical gold standard, right?
Yeah.
To the extent that Gustav Klimt literally fuses gold leaves, leaves of gold within his famous art pieces, right? Like the Kiss is just flecked with gold. The frames are works of art themselves, gold everywhere. And it's very interesting. It's like why is there this kind of very, and that era is marked by a lot of kind of natural forms, no sharp angles, lots of curves, kind of this placing humanity within nature as opposed to being the masters of nature, right? Realizing that we're all kind of connected, and we have this inherent beauty in the world, right? And that we're part of it, and we should bring it into everything we do, into our houses. Our desks should be beautiful. Our kitchenware should be beautiful. Everything, the doorknobs should be very ornate and should be beauty everywhere because that's natural, right? But it's very expensive to do this kind of artistry, right? It was a return to artisanal works because it was also coinciding with like industrialization, right? And kind of factories and pumping out, mass products. So they wanted to return to a little bit of a more craftsman centered art world, and recognizing humanity's place. But to do that, it's very cheap to do the mass produced stuff, right? You needed patrons, and the classical gold standard created, and the industrialists, right, were able to industrialize, keep their wealth in gold, and then they would just pay. Like I'm, a wealthy magnate. I want a beautiful home, right here in Vienna.
Yeah.
That I'm going to hire the most recent artist from this movement, session movement, and he's going to create something beautiful for me. And I don't really care that it costs more than putting up something cheap because it's an expression, right? So this is, I think, there was a really great seminar in Austin that Tour de Meester put on this year about Bitcoin architecture. And he had home builders come, like a guy who's like a master mason who started to he wasn't a Bitcoiner before, has kind of become one now because he realized that our worldview, long-term thinking and value over craftsmanship, value of craftsmanship aligns. Got all these folks together and said, look, Tour gave a presentation and said, look, this is, the new class of elites that have the money and that will be the patrons are going to be the Bitcoiners, right? And the Bitcoiners are going to want something that lasts the decades, right? Like their homes, they're going to want homes that are built in timeless ways, with masonry, with refined taste, right? That generations will look to and say, hey, that was this guy, he was a Bitcoiner, and that was built by this designer. And so I think that should have a beneficial effect on the arts over time, and maybe like your film studio example, right? Funding through Bitcoin bonds, right? Let's take some more risks. Let's find patrons, Bitcoiners who value something that takes a little longer, that might be, harder to sell to the mainstream, because what came after the Belle Epoque and Art Nouveau was Art Deco, right? Which is still pretty cool, right? But it's very different. Harsh angles, very sharp. And, you think about like the Works Progress Association, like progressivism, like it was collectivism, it was socialism, and it was this idea, you think about communism, this command and control idea, like we're going to take control over nature and humanity is going to be at the reins of everything, right?
Yeah.
And we're going to progress through massive control as opposed to, the ideas of the Belle Epoque, which was we're going to think long term and we're going to work together with nature, right? Instead of trying to control, because you cannot control nature, just like you cannot really control the economy, right? You have to let it flow, and you can understand parts of it, but you can never really, control the whole.
This is why I love doing this show, Aaron, candidly, because that was such a fascinating, thoughtful answer. So much there. But it's just, listening to you, talk about that. I mean, I'm so heartened, just to hear that response, just because I think, more people hopefully listening to this and thinking about this on their own, start to, see the different ways in their life that Bitcoin could enrich, the humanities and how the humanities in turn can enrich their lives. The safety point that you brought up, I think is interesting. I've long had a little bit of a beef with Safedeen's take on art, not because I think he's necessarily fundamentally wrong, but to me, I mean, you'll get this as an attorney. It's more of like he takes almost like a viewpoint. It's like a viewpoint level like restriction on speech. He just
Right.
like throw like it's like a content based hatred for a
Mm-hmm.
certain art. Um, and so he basically says, like you were summarizing, everything after the gold standard sucks. And I think he just hates Mark Rothko, which is, and he just kind of, he just like takes, I think he mentions Rothko in the book, and that's like
Mm-hmm.
his example.
Right.
He's just like, I hate Mark Rothko. And so therefore everything after that um, sucks. But I mean, for me, the reason why I think that is incomplete is I think there has been a ton of great art made, post gold standard, from the 50s onward. But I think what great artists do is they sort of cleverly engage with the culture in which they exist, and they can point out, they can kind of playfully subvert that culture. They can be diagnostic about that culture. They can highlight the shortcomings of that culture or the small human triumphs that exist within that, the various machinery of oppression within that culture. But they are, I mean, I think of like our postmodern writer like Thomas Pynchon or Don DeLillo or something like that. I mean, the kind of postmodern culture sort of sucks, but those guys are illuminating kind of why it's
Yeah.
terrifying in a lot of
Yeah.
ways and why it's really destabilizing spiritually and emotionally. And you kind of read, you read DeLillo and you're kind of like, whoa. And I think like post Charlie Kirk, I think we kind of live in I think I tweeted relatively recently, like, we live in DeLillo's world now. He was just 30 years ahead. Um,
Yeah.
this type of, political terrorism and violence. And so I think and your description of the period before the World War One is just really interesting, because I think that's just a different relationship that we had with both nature, with ourselves, different values that our society held to and foregrounded, and the art followed that. The art kind of flowed down from that. So I think it's a great example of what I think the thesis of at least part of the show always is, which is just that after we fix the money, we're going to fix a lot of things downstream of that. One of them, whether it's just this broad idea of risk transfer, which kind of brings two topics that you wouldn't think would be sort of related,
Right.
insurance and art, like together in some ways, because it's a similar principle involved there, but restoring our relationship, the things that we value in society, whether it's insurance, we're valuing risk taking, art, you're also valuing risk taking, but you're trying to foreground different values in society to relationship with nature, et cetera, et cetera. So,
Mhm.
um, so that was a fascinating answer, and I appreciate you taking the time to flesh all that out, Aaron. That was
Yeah,
excellent.
for
I'm not
sure.
sure you woke up this morning and thought, you know what, I'm gonna talk about the Belle Epoque today. So,
No, no, I did not.
so
But this is why it's great to, again, most folks who are thinking about Bitcoin, and engage with Bitcoin, they come at it from, an interdisciplinary perspective, and then you just want to figure out like, how is this going to change everything? Because it seems so revolutionary. It's got to be able to change everything in some way, right? And some of it isn't going to happen overnight. Like, it's going to take the risk takers, right? People who are going to venture out and try something new. But it does give everyone the safety net, I guess I would say, to start to engage in those kind of um, risk taking opportunities. And that's, ultimately too, Bitcoiners who are stacking sats there will have to come a time when they decide, you know, how do I part with my sats on a voluntary basis, right? What am I going to, because it's, hodl till you die obviously is, I don't think anybody really believes that, but that's kind of the sentiment, is just like, drive a car that you have to, fix the oil, yourself every day, bald tires, like don't spend on anything. Just live this Spartan life so you can stack more sats, right? Like that's not it, right? It's the Bitcoin is a means to an end, and the end should be a fulfilling life. And so whether that's, the enjoyment of art, the creation of art, spending more time with your family, right? Like that's, there's Trey Sellers, who's with Unchained and has the Fire Bitcoin newsletter. Like that's like kind of his thing, is, like stacking sats, right? Like, look, we're going to stack. It might have been him, or he was sourcing this from somebody who said, like, it's stacking Saturdays. Like, I'm stacking sats so that I can spend more Saturdays with my family, so that I'm not working, into my 60s, 70s, right? Like, because ultimately time is scarce. You want to be able to spend as much of it as possible with those you love. And, Bitcoiners need to figure out what they value. And that short-term trade of, yes, the Bitcoin, if I'd saved it until I retired, would be 10x what it is today. But like, damn, like I want to take my son on his 10th year birthday trip to Europe, right? Because that's going to be worth more than the plane ticket and the hotel, right? To me, I'm going to value that more than probably the Bitcoin at the end of the day. So we all have to make those value judgments.
Yeah, definitely shout out to Trey Sellers. He's a friend. He's been a guest on the show, actually.
Awesome.
One of the first 5 episodes, I would say. So everybody go check that out. Newsletter's great too. But yeah, I think I just think a lot of people don't really fully understand what, like culturally, what human flourishing might feel like. And so I think we're stuck in this older paradigm, and Bitcoiners are sort of on the bleeding edge, I think, at the vanguard, trying to, across industries and across different fields of human endeavor, trying to sort of emancipate all of us from this paradigm, and in different ways. And I'm hopeful that, going back to the 2020 era of, thoughtful people discovering Bitcoin when they were home from work, that we continue to see the fruits of that. And, folks like yourself coming out with these companies and, different ventures to continue to drive this integration into society, that is sort of the integration before that precedes and kind of like necessarily actualizes transformation. So you need to integrate, I think, before you transform. You kind of get it, which is sort of what Trojan horsing is, I guess. But I don't believe in like separate parallel citadel society. I think that nobody actually wants that. I mean, some people want that, but I don't think I don't think is, to me, that's not the goal here. I think there has to be you have to integrate so that you can then fundamentally transform. And so I see what you guys are doing as Resolvr is to be an important, part of that undertaking that I think will benefit everybody.
Yeah. No, I appreciate that. And, it shout out to you, and we need more folks who are thoughtfully sourcing, these ideas and putting these ideas out into the world. You can never have too many Bitcoin podcasts. I'm a firm believer in that.
Likewise.
That's how we learned, right? And again, how we will, bring this next generation of Bitcoiners to bear, right? On these
podcasts are like
problems.
they're like the new salons in
Yes.
France. Yeah, that's how I view them.
Absolutely.
Yeah, so
I love that.
Yeah. So, listen, Aaron, there's so much more that we could definitely talk about.
We'll have
What I
to do it
want to
another
do,
time.
yeah,
Yeah,
well,
we'll do
let's
it
definitely do
again.
a part two because I want to follow up on the as Resolvr continues to grow and release
Absolutely.
new
Yeah.
things. Yeah. So let's definitely do a part two. But I really, really appreciate you giving us some of your time today. Where can folks find more information about Resolvr? Where can they kind of follow what you guys are doing,
Yeah.
and where can they follow you?
Absolutely. So my personal Twitter, that's a pretty good spot, is at WA Daniel. And then Resolvr is resolvr.io, and there's no E before that last R. Because story for another day on but we come kind of from a Noster, that
Mm,
protocol background, and everybody likes to, chop off the E at the end of.
it's good. Stylistically, I like it. It's good.
Yeah. So Resolvr, no E before the R.io. And the same is on Twitter, Resolvr_IO.
Awesome. Awesome. Well, everybody go check those out and follow along with what Aaron's doing. Aaron, thanks again for coming on. To
Yeah.
everybody
Thanks for the
else,
time.
we
Yeah. It was
will,
great talking to you.
yeah, you as well. We'll see you next time.